Hello everyone and welcome to BFW 2401. This is a brief recording actually for test 3. It's a little bit late, but coming better than not coming at all. I already uploaded for you materials for test 3, including the old tests. This is just an additional issue to additional recording to guide you to some of the important issues of materials that may or should be included on the test tomorrow. But before I start, let me tell you the following. I usually have 25 questions that cover around 50 minutes in each test, including test 3. Now, for test 3, I will only give you 20 questions. And the 20 questions, the purpose is to use only 40 minutes. After the 40 minutes, please join the Zoom session. I will release the test results, and in the same time, I will talk about the final exam. Already in the process of finalizing the final exam, I know the materials, I know the questions, I know the structure. I want to explain it to you sooner now, which means tomorrow, so you can start your preparation soon. We will have another extensive revision class in week 12, where we cover most of the issues. But tomorrow will also be useful for you to start your preparation. Now, let me come back to the test. And be sure also, as I said, to join the Zoom session after your test tomorrow. For the test of tomorrow, let me just share some of my comments here. And this is my comments actually. So this is test 3, and we're covering week 7, 6, 7, and 8. And this is the timing. As I told you, it's 40 minutes. I tried to make it, it's for week 6, 7, and 8, as you know. And we are trying to cover around 6 questions here. This is what I planned, 6 here and 7 questions for the credit risk 1 and 7 questions for credit risk 2. Now, let me tell you what are the materials. And the materials is this is just a note to join the Zoom. In week 6, if you remember, we talked about the liquidity causes and how we address liquidity. And we actually did that in the first few slides, how to address liquidity. And if I can take you to here, where you can see, let me share this also. If you look at those slides, for example, these slides, this slide. Let's agree on the following. We said when we talk about liquidity, that liquidity either come from the asset side or the liability sides. And how we address it, either we sell some of our assets and we call it stored liquidity, or we borrow from others and we call it purchased liquidity. Now, whether the asset comes from the asset, whether the liquidity problem comes from the asset side or the liability side, and how we address it and what scenario, either is stored liquidity or purchased liquidity, there will be an impact on the financial statements size, and specifically on the balance sheet, whether the balance sheet will increase or decrease. I think there is 1 or 2 questions about this. Now, the other thing also on liquidity, we also talked about the modeling, if you remember. We talked about 6 models, liquidity statements. We talked about the finance gap. We talked We talked about liquidity index, and we talked about, for example, number 2 is just some type of theory. Also, this one is type of theory, which is the planning. This also type of theory. The calculation is also in financing gap and liquidity index and this one. And we discussed those in the tutorials. So please be aware if you find the question for financing gap and how do you deal with that. Now, the other thing I want to tell you, we have 5 parts and liquidity. Please ignore part 5, part 4, and 5. Part 4 and 5, please ignore it. Ignore all of this until you reach here. I just want to test you about this slides, which is the trade-off between the liquidity risk and the liquidity cost when we talked about the CD and the demand deposit. And I think we discussed that in one of the tutorial questions. I also want you to be aware of this questions, which is the calculation of the implicit interest, IIR. And this is actually found, and you can find it in my slides. Please be aware of this slide, and this slide. Be aware how to calculate this. I think there is 1 or 2 questions about it. Now, let me come back here. Look, this is a big thing here, and liability structure. This is all financial products, and I will not ask you about financial products. So this one, you don't worry about it a lot. Just worry about the first part, which I told you about the modeling and about the concept of this liquidity, and look at the tutorial questions. This is what I want to tell you about week 6. Now, for week 7, as you can see, we talked about loans. This is another financial products. What are the loans? They are secured, not secure. What are their types? Now, this one, I will not ask you about it. I will take it off. But then we talked about the contractual return and the promised return, promised and contractual return, and also the expected return. You remember when we calculate the K is the fees plus the basic rate plus the premium, and we divide it by the 1 minus the compensation balance, 1 minus R, which is the reserve. That formula you have to be aware of, and you have to be aware of calculating that one. Now we calculate the K, and from the K, we see the probability of payments, and we can calculate the expected return, as you know. Now, sometimes I will be including a question like how we calculate the expected return when we have a collateral and when we don't have a collateral. And we discussed that clearly in the tutorial. So these ones, I want you to be aware of it, which is the expected return and the contractual return. So this one and this one, you will have, I think, some questions about it, which is the calculation of the K and the calculation of the expected RE between 2 brackets R. Now, remember we talked about the models, and this is what I want you to know. This is all the models, which could be, as I told you, I have usually 25 questions. I take 5 questions. Now, the 5 questions, I take them. I try to make this test not very challenging. So this one, I think you will be aware of. The Eltman also, you should be aware of it. This is the Eltman. And you should know in general what are those linear models. Those are the 3, we call them linear models. Please, if there is a question about the linear, what are the linear models? These are the linear models. Those are the 3 ones. This is the linear models. Now, we talked about the term structure, 1 period or 2 periods. This one also you have to be aware of it. This you have to be aware of it. Mortality rate, I think there is one, but no calculation here. The RORAC, we actually cover it, and you should be aware of it. Now, option pricing, which could be challenging. There was some questions, the test, I take it off. So this option pricing, actually, I take it off. you are not responsible about that. Migration analysis is not a big deal. Concentration limit, you are responsible about it, and we have one question about it. Now, these other ones, you can take it off. I have some questions about modern theory. Also, I take it off. So this one, you don't have to worry about it. The rest you should be aware of it. Now, the other questions, this is the calculation. The other questions are just, general questions, theory questions. Now, you remember we talked about the risk management when we talked about the derivatives to control credit risk, these ones, all of those ones. And I told you, you may receive one multiple choice question, but actually I didn't include it. But if there is, I don't think it's there. I don't think it's there. You can take it off. And nothing more. This is when we say what just managing, we can manage credit risk either through the derivatives or we can sell the loans and do securitization. And this, I think we have talked about it in week 3. There is something about that thing. It's only a theoretical one. So this is actually briefly some other comments for you to cover week 6, 7, and 8, which is covering and test tomorrow. If you are preparing well, I also will release, if you are interested, I think I have released the workshop of the last semester, but just concentrate on following those comments and hopefully it will be okay. I'm now, I'll be available. If you have any questions, you can send to me and hopefully everything will be okay. I want to thank you very much and hopefully we'll do well. And please join me in the Zoom session for the final exam tomorrow. Let me end this session and see you soon. Bye-bye.